Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Wednesday, March the 8th, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets. And then we create our hypotheses. We do create four main hypotheses in order to have a plan in place. We do not know what the market's going to do. We can simply have a plan for what the market could do, then wait for the market to open, show us who's in control, and then use the plan that we've created that best suits the market and execute on that plan. We do not try to predict the market. Nobody can. We simply want to be prepared so we do not have to think about what to do in the heat of the battle. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything here in the go-to live, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so yesterday our main hypothesis was a rotational day inside of the gap zone. So we were talking about the fact that we'd likely test, that's not the one I want, sorry, that we'd likely test both sides of the distribution, testing both the HVNs, the naked VPOC at 74.75 and the 70.50. Our hypo 1 was a move up to the 74.50 first, and then a rotation down into the 67, and then chop around there, maybe a push down into the 62.75. Our secondary hypothesis was the move down to the 67, a rotation up into the 74, and then basically chopping in this distribution zone. We didn't really chop. We did get to the HVN, the naked VPOC, but most of the time we spent in the lower distribution on the day, and then we had that late day push down. It looked like they were going to go for the 62.75. They did overnight. They took it right down to 59.50, which is a value area. That Marvin pointed out in the chat room this morning. The distribution was pretty good, good Gaussian distribution, pretty balanced profile. The naked VPOC was, or the VPOC was 67.25. Right now we're trading right back in this price. You can see we're getting price acceptance. If I look at the Globex, you can see that we're creating a distribution zone here. Pretty ugly looking profile overnight though. Inventory is basically net short. We opened up at the 66.25. Our high was 67.75. For most of the night, we just put in a newer high at 68.25. We have a double top up here. So we've created a weak high. We're coming up to test it right here again. On the news, we had non-farm payroll this morning. Let me bring the news up so we can go through that. We had non-farm payroll, ADP non-farm employment change was a nice big beat, really good beat. Previous 261, 298 this time, expected 184. 830 we had Canadian building permits, 5.4% versus 3.1. Big increase there, especially over the last one. And then we had labor productivity quarter over quarter. That basically came out as expected. And then we had revised non-farm productivity. That was a big beat as well. And we had the revised unit labor costs at 1.7 versus expected 1.6. 10 o'clock, we've got final wholesale inventories, but the big one will be crude, and I would expect some action here as well from the 10-year bond auction at 1 o'clock. All these times are in Eastern. Don't forget, if we're looking forward here, tomorrow we've got the ECB press conference, and then we've got unemployment claims in the morning, plus the minimum bid rate. So anything from 7:45 Eastern through to the 8:30s could be some good opportunities. And then on Friday, that's the big news again. We've got the average hourly earnings, non-farm, and unemployment rate. Remember that tomorrow is rollover. We're rolling over to June. Can't believe it's come so quickly. It will trade until the end of next week. Next week is going to be big because we've got obviously we've got the Fed rate coming out on the 15th, and then we've got the debt ceiling on the 17th, and we also have, of course, quad witching next week as well. So these 2 weeks, there's going to be some opportunity, but there's going to be some increase in volatility. So just be careful out there. Okay, so I always like to start my day. Come on. I always like to start my day with a simple candlestick chart. And starting with a monthly, I use a 9 EMA, 20 SMA, and I'm looking for slope and separation of the two moving averages to show me strength of trend where it's being challenged. Multi-year upward trend on the monthly, challenge at the end of 15, beginning of 16. Then we take it back, had a rising 3 pattern here, candlestick pattern, and then we get continuation, and we go put a new all-time high. We do not even challenge the trend on the larger time frame monthly until we get down to 2243. This is a very strong trend up. We've got some repair work to do as well above us, so even if we get a bit of a pullback, I don't think we've seen the high at 2401 hold for the rest of the year. Could happen, but not likely with the amount of repair we have to do. On the weekly, same thing. We've got good slope, good separation. We've got a technical gap here. Right now we're creating an inside week. So this could turn out to be a bit of a foobar Mr. Sneaky on the weekly time frame. We'll have to wait. We still have 3 days to go this week to see if we hold that low from last week at 57.50. We came down to 59.50, 2 points away from it this morning. We are seeing a little bit of weakness, but the trend itself does not get violated until we get down below the 23.25 area. So trend is very much intact on the weekly. On the daily, well, we had the foobar Mr. Sneaky technical gap. We came down and closed the technical gap. Yesterday broke below the 9 EMA, and we've been trading below it most of the night, but we're coming up on it right now, and you can see we're trading that 23.68 and a quarter again, creating a triple top and a very weak high. Likely going to expand this Globex high coming into the RTH. Still have lots of time left, but the overall trend is weakening a bit here. It's being challenged right now. If we hold below the 9, a move down to the 52 area would take us down to test the 20 SMA on the daily. Going to the intraday, you can see that we have rolled over and we've been trending down and created a foobar Mr. Sneaky right here. There's your foobar, and there's your Mr. Sneaky technical gap. Come up, close the technical gap against the 9, and now we're getting a little bit of continuation above the 9, and we're challenging this downward trend. If we hold above the 9 EMA at 67.50, a move up to the 20 SMA 71.75. I'm actually watching the 70.50 again, and I'll show you why when we get into the composite chart. But the overall trend is down on the 4-hour, but being challenged. On the 1-hour, you can see we had that downward trend. Again, pointing this out, foobar, Mr. Sneaky, technical gap, close the technical gap, get continuation. Now we're above the 9 and the 20, and we're getting the possible start of an upward trend on the 1-hour. Going to the 30-minute, You can see that we've got the trend going to the upside now. Good slope, good separation. We're above the 9 and the 20 right now, and the trend is up again on the 30-minute. And then as we go to the 15-minute, very strong trend, gets challenged, gets taken back, gets challenged again. Now it's taken back again. So we're getting this this consolidation, but it looks like we're going to get a possible continuation up on the 15-minute. And then on the 5-minute, you can see basically the same thing as the 15-minute, and we're getting slope and separation to the upside. We do have a possible foo-bar Mr. Sneaky setting up here on the 5-minute, and if we do, look for him to come down into the 67 and a quarter to close that technical gap. Taking a look at the composite, so you can see that just to put this into context, I always like to tell the story. So we balance out here, and we create price acceptance here around the 22.65. Then we break out of that balance. We gap up. We create the 3-day island top with the price acceptance at 59.50. They gap back down. They come back down, pick up the late buyers down here at the most accepted price before the breakout at 65. Accept price higher at the 76, then we gap up back into the island top, and we accept that balance, that price again at the 89, and then we go into price discovery, gap up, gap up, gap up, create 2-day balance, accept the 22, continuation, 3-day balance up at the 41, then we gap up again, and then we create the 6-day balance in around the 62 and a quarter. Get another gap, which is, we talked about this gap being the possibility of an exhaustion gap. We get the blow off. Top up into the 24.01, and then we get the bearish engulfing. We try to hold value at 80.75. We can't, and then we start working our way down. We violate the one time framing up on this day right here, which is the Friday. Monday continues lower. And then yesterday, it continues lower again. The 2-day microcomposite VPOC, look at that, 23.70.50. That's why I'm watching the 73.50. And if we don't hold, our over-under line today is going to be that 67. You can use the low at 64.50 from yesterday if you want, but I'm going to be using the 66.50 myself in order to give me a shot at the low for yesterday, and that's going to be my over-under line at the 66.50. It's the 2-day value area low. It's the CLVN here on the composite, and then I'm looking for that push down to yesterday's low and the overnight low. Down here back into this balance right here. The overnight low is 59.50. So if we can hold above the 66.50, then I'm looking for them to rotate back up into the 23.70.50 area and possibly test the other side of this balance again up at 74. 74 is our key line in the sand above 74. I'm looking for them to push up back up into the 80.75 and come back up into this 3-day balance up here around the 80.75. So taking a look at the Globex again, we're probably going to put in. We did just put in a higher Globex high, but we could get continuation. Our overnight low, though, is not going to change, and that's all the way down at 59.50. Get this out of the way. And right now, I'll put the, we've got a double top now at the 68.75. I'll put it in for the time being. I'm likely going to have to adjust this. We also could get a VPOC shift overnight to 67 if we come down here and trade some more. But right now it is at 65.75. Again, the time that we're we're doing this, you know, I have to put the numbers in, and then I just have to make adjustments. If I, you know, if I close this this off, hold on one second. Gold's breaking down here. Remember what I said yesterday, if we got below the 1211 on gold, that things could get pretty ugly pretty quickly here on gold. We got a $10.50 rotation off of that 1218.50. We came down to the, well, I'll talk about that in a couple of minutes. Let's just get this done, shall we? We're just missing an opportunity here on gold. I'm just going to pause this for a second. Okay, sorry about that. So right now we have an LVN right here at 63.50. I'm going to be using the 66.50 as I mentioned. It's just one tick below the value area low. So I'm really going to have to use this as a slush zone, you know, between the you know, the 67 and the 66, and I want to make sure I'm below the 66.50 for the shorts. I want to make sure that I'm above the 67 to the upside. The high side of this, the value area high. Then we've got the 73.50. Don't need any of this for the rest of this. Bring this back down. I'm going to be using 74, as I said. I'm actually going to adjust it up into the 74. No, I'm going to use 74 because I want to go for that naked close at 75.50, and then 78 and a quarter, that range low, and then a move up into that 80, 75, 81. Our upside daily, our 20 period full session daily ATR is running at 1513, so off of the low 59.50 plus 1513, our upside daily ATR target is 74.75. Which means I'm going to adjust this down to the IB from yesterday at 73.50, and currently off of, we're putting in a new high here. Hold on a second, I gotta just, so 69 and a quarter. Hey, they've been doing this a lot to me lately. As I, you know, this could continue to increase. So currently off of 69 and a quarter, our downside daily ATR target 54 and a quarter. But again, this might change and have to be adjusted again. Looks like I'm going to have to adjust a bunch of things. Just want to make sure that that's correct. 54 and a quarter. Yeah. Okay, and then to the downside, 64.50, and then looking for 62 and a push down to the overnight low at 59.50. Trade area at 57, and then moving down. We still have this gap zone down here. Our key line in the sand, our big support, is still down at the 51. Below 51, I'm looking for a bigger move down into that balance at 41 and possibly lower. So based on what we have right now, again, we're putting in another new high. Everything's got to be adjusted slightly. I'm looking for an open auction in range. I'm looking for a large rotation. I think we're going to get some large rotations coming into the RTH Open. And my main hypothesis is a move down into the 67, possibly down to the 64, maybe even 62, find responsive buyers, and then rotate us back up and continue to move up into the 70, 50 area, chop there, and then push up into testing the other side of balance up at 74. Maybe a late day probe up into the 73.50. Hypo 2 is an open auction in range, a move up, failure to break out of value or a false breakout, rotate down through to the value area low, chop around in the 67, 66 area, and then push down and move down into the 62, 75, possibly come down and take out that overnight low at the 59.75 and close somewhere down here between the 51 and the 57 area. My Hypo 3 is a open auction, open test drive, come down, test the value area low, take out the naked VPOC, come up, test the 71, chop in here between 71 and 67, then push up, get a strong push up into 74, chop around in the 74, 75, and then spike up into the 81 and come up and into this 81. That's Hypo 3. And then Hypo 4 is the opposite of that. Open auction, open test drive, test both sides of the value area, then fail, come down into the 62 to 64, and then break lower, push through down into the 57, 54 area, chop in there here, and then fail and push down into the 41 and get a trend day down to that 41 area. This is not key line in the sand anymore. So those are my main hypotheses. Again, we could shift both the VPOC and the overnight high. Taking a look at gold, because I wanted to talk about this. Yesterday I was talking about the fact we were looking for the move down into the 1816. And then once we got down to the 1816, this is the composite VPOC going all the way to October the 24th, 2008. It's the most traded price. We were expecting to chop around in this area. Yesterday we did. We got as low as that 1410, and then we basically just chopped around. Today, overnight, we've tested the lower side of the balance, and yesterday I said if we broke below the 1211, the lower side of this distribution zone around the 1860, that this could get ugly fast. And we broke below the 11 on the non-farm, and we're pushing down, and we're coming down and testing this CHVN. I paused because I wanted to short gold with that break below the 11, and I'm running short again. I was running short earlier as well. I've already funded the short, so I've got a single runner going, and I'm looking for it to push down into this 1203. If it doesn't hold 1203, I'm looking for the 1200s to fail and to come down between the 1195 and the 1192 as key targets for below 1200. If we bounce off of the 1206 area, look for them to rotate and test the CLVN from below, and if we can get back above that CLVN, look for them to suck it up as a magnet back towards the 1860. We made a $30.90 rotation down. Okay, that's getting close to an average size of a rotation on the larger time frame, between 30 and 40. So we could see a bounce, but that's not to say that we won't get continuation down, as this gets pretty ugly, especially with a rate increase as a possibility next week. So gold's going to be volatile for the next 10 days. So be careful. Don't get stubborn, because you can get hurt really quick in gold. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.